welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alcanan, along with Dennis Dick, and we have Sean Udall online of the Tech Stock Strategist. And folks, he got up really early this morning in Arizona to join us. Sean, how you doing today?
I'm good. I'm awake. I feel good. I'm always up this time. I wouldn't say I'm necessarily showered yet, but I am always up by now. And, analyzing the markets, figuring out what's going to do, and seeing if there's going to be some crispy fried bears or crispy fried bulls out there today.
Crispy fried, I don't know if you're referring to Yum Brands at all, but soon, when we move downtown, we're going to have a studio. So when we start doing the show live with some video, you might have to get up a little earlier and take a shower.
Okay, that I can do that too.
All right. First of all, you've been a perma bull, or you've been very bullish. I know you get bearish on individual stocks, but you kind of sit out these down moves. And seriously, last week when we were talking, you were pounding the table to me how this bottom kind of reminded you of what we did last October, and we've gotten a turn. Now, for me, I can kind of see the turn in the market, but it's always the continuation that's the hard part. And we're 100 handles off the S&P's low that we had last Friday, trying to clear a double top here. I mean, is it still okay to be bullish here after the big rally on Monday and Tuesday?
Well, yeah, I think it more depends on your time frame. I think it is, and let's clarify this a little bit. There have been a few times I've been on. In fact, in April, I want to say, where you said, hey, what do you think? And I'm like, I think you should start getting pretty cautious on the market right now. So, I'm not perma anything, but I will say this: I've been more bullish than bearish, and I've been tactically bullish on some bearish on some really good names that basically got slaughtered, like the whole biotech sector. But as far as I'll definitely say that I've sort of stayed in my bullish camp, right? So I'll take 100% ownership of that. And that was horribly wrong in August. So there's no getting around that. But as far as, I think you're making a great call. The continuation is harder. I think like I say, we were talking about a week ago. I was about as bulled up as I get because NASDAQ 4,500 looked like a really good retest level. Everybody was worried about the S&P breaking down and going to 1820. And my view was like, okay, wait, if we're at 1865, who cares if we go to 1820? That's only 40 more points. We could get there in 10 minutes and be done with this thing, right? So, I mean, here's how I think the setup is for sort of Q4 through Q1, 2. I think, what's everybody worried about? Strong U.S. dollar. Well, we've had a strong U.S. dollar for 6 quarters. So on the second derivative basis, that's actually going to quit being as big of a headwind. And in fact, if the dollar weakens a lot over the next quarter, that could end up being a tailwind. I think the other thing, and here's my favorite. You know me, I'm more individual stocks for the market, right? My favorite setup right now is just take Apple for an example. Although Apple's not my favorite thing, I actually like Beta right now. But what's everybody doing on Apple? They're cutting estimates. So actually the best setup for stocks is when you get lots of estimates revisions lower, and then companies come in and they're about the same as they were before, right? So that's probably if there's a thing that makes this continue a lot higher through earnings, I think it's that the analysts are going to get far too pessimistic, cut numbers too much, use the same old acts, basically say, oh yeah, strong dollar is going to kill us, blah, 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 blah. But they're not paying attention to what's been happening. The dollar hasn't strengthened for 2 quarters. So it's really not a continuational problem for the strong dollar. We're kind of dealing with something that happened, 4 to 6 quarters ago, which is actually waning now. And then, here's my view on China. I think it's time to start getting incrementally more bullish on China, because I think what was China doing wrong? They were trying to prop up the market. But people forget that China actually wanted to engineer a slowdown. They wanted the housing market to cool down. What did they do? They raised rates a number of times. They did some things that were anti-stimulative for housing and some other sectors. Well, guess what? China got their wish. It's sort of like everybody forgot about a year ago what China wanted to do. Now China's on the other side. As long as China cuts rates and does stimulative things that actually work instead of going after short sellers and trying to prop up the market with weird tactical things for the stocks, I think the Chinese market will heal and do well. I'm not sure it's going to be great, but those are probably the two biggest things in the bullish camp. I think China probably be surprised to the upside over the next 6 to 9 months. And I think the strong dollar headwinds, which now everybody's hyper focused on, was really a big concern 3 or 4 quarters ago. And I think that strong dollar issue is waning.
All right, when we had you on last time, it was not a pretty time. The markets were getting beat up, and I believe your comments from Rod Hood, it was a stealth bear market, and it certainly was, and some individual issues here. The fact that we went down again and close and retested the lows. I mean, because that was kind of a fake low on the flash crash, anyways.
It was.
Yeah. Do you want to retract that statement? Stealth bear market?
No, because that's kind of what we were in, a stealth bear market that became a full bear market, right? So for 6 months, you had half the Russell 2000 acting terribly. I think that when the market was only down 5 or 6%, you had half the stocks down 20 or 25% in the Russell 2000. So I don't know what that number was. I'm trying to find that number where we were at the bottom of the market. But no, I think we went stealth bear market to effectively, kind of a full bear market. Although it could be a short-lived bear market. I mean, I don't believe in definitions. I actually think this market is more of a bear than some markets that have been down 20%. I could give a about 20%. But yeah, no, I mean, it was you had far more stocks down 20 or 30 or 50% on the year, and frankly, it was kind of weird. So it was a very narrow leadership, and now it's kind of turning around. And like I say, the thing now, I mean, I think the single worst thing you can do right now, by the way, is buy super strong charts. Because after sort of a mini crash or a bear market or whatever, what's the stuff that does the best? It's the stuff that's been bombed out. So I still hear a lot of these folks out there. Oh, hey, buy Netflix. But what are the strong charts out there? I mean, that's amateur hour 101. If you ask me, I think you need to find stocks that have been decimated that still have a lot of value in them or have some unique characteristics. Or they just haven't missed a quarter. I mean, a company like Splunk hasn't missed a quarter in 6 quarters, and it's been killed. So, I mean, I'm kind of a kid in a candy store right now. I feel a lot better now after the retest, in fact, than I did kind of in that, that 1-2 week period around the August low, that fake low. By the way, it wasn't a fake low for every stock. There have been plenty of stocks that kind of put in the fake low, and then, oh, by the way, they turned it into a real low. Kind of looks like a fake low on Apple and kind of looks like a fake low on the NASDAQ, but there's plenty of stocks that actually retested and went to lower lows. So I'm kind of hunting through those. I mean, like Bob is a really good example. I think Bob hit a fake low. They basically retested it. Again, I hated the stock at 120. At $60, it looks a heck of a lot better. So, I wouldn't be surprised if Bob had traded between 75 and $85 and did it before, in the not too distant future. That's just kind of one example.
Yeah, and we are seeing some institutional buying pressure in this stock this morning. I was just pointing out right before you got on the show there, Sean, 100,000 shares to buy at 65. So some institution is agreeing with you here. Kind of looks to me like it could be in breakout mode too. If you get above 65, it starts to open up. And I completely agree with what you were saying is looking for stocks that are decimated, because we've been talking on the show the last couple of days. The strongest stocks have been the stocks that have been decimated, like the Caterpillar is bouncing back 7-8 points here in a matter of 2-3 trading sessions.
Caterpillar, Oils, Joy Global.
Yep.
Go on. Keep going. I interrupted. Go ahead.
Yeah, I was going to say Joy Global, FCX. You could go into some of these commodity stocks. Alcoa's had an incredible 3-day run. This stock was $9 3 days ago. It's over $11 here this morning. I mean, that's 20% run here in 3 days for a stock. So you don't get those runs in Netflix. So I completely agree with what you're saying.
No, I mean, here's what people are going to do. They're going to buy FANG, right? I mean, and now by the Joel can attest to this. I mean, I hated FANG. I said FANG was going to get destroyed. I wrote several notes on it. I'm actually surprised Amazon. So Google is the one kind of fairly valued stock. In fact, I don't necessarily hate Google. I do think Google, the recipe for Google getting decimated also exists. That's a whole nother show probably. But I mean, Facebook, Amazon, Netflix. I mean, if you're, maybe you can day trade those. Maybe you can buy little breaks, catch a point or two, catch a couple option trades here and there. But again, that's just, if you're buying those kind of charts, you're not going to make any money the next 3 to 6 months.
We got a question out of the chat here, an interesting chart. Your thoughts on MKTO? That's Marketo Inc. I have no idea what they do. This is a Rob Hood looking kind of chart here. It comes up to resistance. Yeah. What do you think? Is this one, being a little leery because it's had the nice run, or do you like to see continued strength?
Now this is interesting. This is a cloud stock, kind of a smaller version of stocks that are in that kind of Workday Splunk. They kind of do their own deal. To be honest, this wouldn't be my favorite. Although this chart is way off of 52-week highs, and it's also more notably off multi-year highs. So the spring of 2014 was when this guy kind of had its kind of glory days, and then it crashed in the spring of 2014. I've traded this. I will probably be long this stock with sort of some kind of low risk trade into earnings. So maybe some cheapy option. Maybe some cheapy options or something like that. I probably would like it better under 28, but they're kind of in their own little deal. If you look, they spiked up and held it. They had a really, really good earnings report last quarter. So, and it's interesting they weren't taken down more. But they crushed earnings, Joel. So that sometimes things that have had just unbelievably good earnings reports and still are kind of trading below their last earnings report high, you almost have to look at it in a little different light, right? I would probably look at Splunk kind of in a similar way. They've crushed the last 2 quarters. They've kind of got no credit for it, although maybe in the absolute worst of the days, the October 24th day and the 2 September retest days, they kind of held up okay. But yeah, I don't know. I kind of, Marketo, I'm probably not going to do anything until we get closer to earnings. I'm sort of a neutral on it. Sorry to be neutral, but that's the best I got.
Yeah, we got some numbers to deal with here. A double top at 31.52 and 53. The recent high of the move at 31.59. So you got some work to do in that 31 handle for another breakout. All right, Sean.
That's right.
We got to go to that thorn in your side, and that would be Twitter. First of all, let's talk about the stock technically. Also, what's your take on Mr. Dorsey taking over?
Yeah, okay, so we've talked about this. I mean, I like the Dorsey takeover. I mean, I think, he was always sort of my first choice realistically. If I could have created sort of a dream scenario, maybe Eric Schmidt might have been the only person on the planet that could have been better. But no, I think he's good. I think we're seeing sort of what I call the beta test of Project Lightning or this moments thing that they call it. I think we're kind of seeing phase 1 of what that ultimately could build out, or maybe be the first product in 2 or 3 products. Here's the interesting thing too about that release yesterday on Project Lightning. The power users are going to look at it and they're going to go, well, who cares? What does this do for me? Well, the power users don't need really any improvements on Twitter. The power users, when evaluating something like this, they need to put their mind into somebody who's saying, okay, somebody that thinks Twitter is too complex and hasn't been using it, right? So it's hard to do that. If you're kind of a power user of Twitter, it's kind of hard to think like somebody that doesn't use Twitter. But that's what some of these other developments are like. But no, I think Dorsey's good. By the way, you got a possible retest. There was kind of a fake low at 21-ish, whatever that spike low. But 23.5 to 24.5 was definitely a real low on Twitter. And what was it, like 2-3 days ago? There's a very real chance, I think, that could be a retest that sticks. If we are talking about a company too that they beat numbers and raised last quarter, and they got absolutely no benefit, and the stock was trading 38 to 40 after hours. So that's kind of still what I think. I mean, as long as they don't have a horrible quarter, which I don't think they will, I kind of think they can get back in kind of low to mid 30s. I think they do need user growth to get back into the 40s and 50s. And we'll see. It's up to them to prove the user growth case. But this stock is very, very cheap on growth metrics relative to kind of anything in their peer group. I mean, if you value them versus a LinkedIn, which, by the way, LinkedIn's not growing that great anymore, and yet that's the Teflon Don stock. I mean, Twitter has more than twice the growth of Facebook, yet Facebook gets all the accolades. So on a relative metric basis to growth, Twitter's trading at something like a 70% discount to LinkedIn and a 50% discount to Facebook. So, if Twitter stays here, then those two stocks have far more downside than Twitter does. But I think Twitter's going to play catch up. By the way, I did notice that Prince Alaouid took a 5% stake. I don't know if he's the best short-term investor, but he's a heck of a long-term investor, and he's made a lot of money on key stocks long-term. So, if you get a few more guys like that buying big stakes, I mean, if you get a guy like Icon or David Tepper that discloses a 5 or a 7% stake in Twitter, look out above.
And the Google deal, that should be starting to pay some more dividends.
It is, because see that the whole issue. In fact, there was probably too much optimism on that when they first signed it. But if you know the way the technology with these companies works, is it it can take 2 quarters just to figure out how to sort of jointly monetize this stuff. And that's about how long that deal's been running now. So I think actually Twitter's already said they're seeing traction. They're seeing lots of impression traction. Traffic is increasing. Even Google said the same thing. Google said they're noticing traffic increase off the relationship. But I don't think they've even tried to monetize any of it. So that's coming down the road. So I think that'll be good. Yeah, by the way, Twitter's also in Spotlight Search. If you have an iOS device and type in searches and use Spotlight Search on an Apple device, you'll see Twitter results show up. And that's something that they almost have never even talked about. So I think that's a positive too. I think the biggest thing is we just have to get past earnings. It just can't miss. As long as they don't miss, frankly, I don't really know how high the stock can go. I mean, if they basically beat numbers again somewhat comfortably and they guide in line or guide slightly higher, I don't really know how high the stock might go. Because it's not like they need to show 20 or 30 or 40 million users a quarter. I mean, this is a stock, if they just show MAU growth of sort of 8 to 10 to 12 million a quarter, which is, let's say a little more than 10% a year, that could kind of crush the bears. So,
Sean, we're up against the clock here, but in 30 seconds here, just give me, what do we need? I mean, we're trading at Monday and Tuesday's highs here, kind of near the top of the trading range. What do we need? What do we need to sustain here?
I actually think we need Apple to not keep getting rated. So I think if Apple can kind of get back above 112, 113 and build some steam, that could be enough to keep the NASDAQ going. The other thing I'd say is the biotech sector has been, it just got flat out rated yesterday. Same thing. I mean, I don't want biotechs to lead, but if they just can kind of hold flat and other stuff go up, then I think the market can keep going.
All right, Sean Udall, tech stock strategist, joins us here in Benzinga's pre-market prep. Always great information, Sean. Thanks for getting up so early and joining us. We'll talk again soon.
Appreciate you guys having me. Have a great day.
Thanks, Sean.